Welcome back. You're watching us here on Halftime Report. We've heard from the management of Tata Steel, but let's also get in some commentary on the way forward for the capex coming in from another smaller company, much smaller actually. Action Construction Equipment posted a strong set of third quarter numbers. The revenue is up 27%, but EBITDA is up 53%. The outlook for the sector going ahead amidst the budget announcement. For all these things, we have with us Sorab Agarwal, who's the Executive Director at ACE. Sorab, thank you for joining in. I remember clearly the last time you joined us, you said that the third quarter will be, one of the best quarters for the company, and the fourth quarter will be even better. Can you break up your revenue growth in terms of increased utilization and increased price growth? If you could break that up for us and tell us what, the Q4 could be for you.
See, our utilizations have definitely gone up, and price growth has really not been much in the last quarter because most of the price increases or whatever needed to be done to offset inflation or commodities was done before that. And on the whole, as a company, I think we are operating at about 65 to 70% utilization, as of now, more towards 70%. But yes, different segments, if I put cranes, definitely we're at about 75%. Then metal handling about 65, 70%, construction equipment 50%, and agri maybe close to about 45%.
Mr. Agarwal, hi, thank you for joining in. Well, cranes obviously is your biggest growth driver and it's your biggest contribution in terms of revenue as well. What can you guide us in terms of demand as well as incremental orders?
See, the demand has been very robust post the monsoons, and we saw a good quarter three. And going into quarter four, again, things seem to be on the upswing. We have more orders than what we can execute, so we are struggling to execute as of now.
Wow. That's a great problem to have, more orders than you can execute, right? Tell us a little bit about that. What is the order book, what is the order visibility like, both from the defense space as well as, I understand that you've got an order from the Ministry of Defense for supply and manufacturing of special mobile cranes. What is that, execution process looking like for you? And in terms of overall growth on the top line, what are you looking at in FY24?
See, I'll start with the last question first so that I don't forget it. I think FY24 next year, I will first talk about FY23 rather. I think we should be closing with about 28 to 30% growth in our revenue. And subsequently for the next year, we should be targeting at least a 15-20% revenue increase, if not more. So that will unfold as the year unfolds. But looking at the overall prospects and the way things are, and let's say the overall capital outlay towards infrastructure, whether it's roads or railways or anything that comes to your mind, I think things are looking very positive. And with respect to your defense question, yes, we had supplied a special crane mounted on a special army vehicle for handling bigger missiles, and we have got orders for that again to be executed.
So you said that you've also set up a manufacturing facility for bigger cranes, and I heard you mention that you may not have, there is a bit of a, you can't supply, you have so many orders that you're finding it hard to supply to. So will you be looking to further raise your capacity? If yes, by the end of FY24, what would your capacity look like?
Yes, there are two things happening. One is that we are setting up a new plant for bigger capacity cranes, that is 40 tons and plus. So that should be operational in Q1 of FY24. So that will also give us the capability to make even bigger cranes. And with respect to our current range, let's say less than 40 tons, there again, I think we are already working at 75%, and within this quarter, that utilization will further go up. So we've already envisaged increasing capacity there by about 45 to 50%, which we will start executing within this quarter. And hopefully in quarter two of the coming year, FY24, we should be able to operationalize that facility as well.
Sorab, the last time we spoke, you said that you are targeting 100 crores of revenues coming in from exports in FY23. And looking at about 10% of your sales coming in from exports eventually. Are you on track for that? That's one. And agri, you said, was just 45% utilization. Obviously, this was on account of the weakness that we saw in the agri sector this year. What kind of growth and recovery do you envisage in this sector next year?
See, the first part of your question, with respect to exports, we are very much on track. So this year we should land up with about more than 6% of our revenue from exports. So it will definitely be upwards of 100 crores, maybe 120, 130 crores, maybe slightly more. And the way things are and the way we've been able to push ourselves and establish ourselves in some international markets. So hopefully next year itself, we can target to touch about 10%. So that's our plan as of now.
Okay.
And what was the second part of your question?
The agri part. Agri was 45% utilization. You said that maybe, it could recover next year.
Yes, we are working very hard on that, and hopefully by Q1, Q2 next year, we should be seeing better results and better utilization from our agri segment.
Okay. Saurabh, just a two-part question. You've done margins of around 11.7% as per your presentation in 9 months, which is better than that 9.89% that you exited FY22 with. You have indicated that your order book is strong, but you are a little tentative in terms of the pricing pressure or the ability to hike prices. Where do you expect margins to probably sustain going forward, considering that input costs are still relatively on the higher side? 1, and 2, can you guide us in terms of what your debt and cash on books looks like?
See, we are not under any pricing pressure, and as and when things have gone out of way, we've been able to increase our prices. So hopefully, going forward, I think in the current year, we should stabilize at somewhere around 11% plus with respect to our overall EBITDA margin. And going forward, we should be in the 12 to 13% range. And what was the second part of your question, please?
Your debt as well as your cash on books, because I was looking at your net debt to equity. It's minus 0.2 for FY22. So what do you have in terms of cash on books as well as consolidated absolute debt?
We are close to about 290-300 crores on our books available as cash, and we hardly have any debt, maybe close to about 28-30 crores, which was nearly similar to what we had last time. And during the last quarter, as conveyed earlier, we've been able to, improve our working capital cycle further. So if you look at the quarter, our working capital days have come down to 17 days, which were at about 35-40 days.
Okay, all right. We will leave it at that. We have many more questions, but I guess we'll save it for another day. Saurabh, thanks a lot for joining in and giving us an update on the business. That's ACE. They have so many orders and finding it hard to service them. I guess that's a good problem to have. It's a very, very strong stock. The stock is up. Amidst all of the volatility in the market, the stock has risen about 50% in the last 12 months, and their order book is very strong as well. They expect 11% EBITDA margins for FY23 and good growth in the coming year. Let's do one thing. Let's take a quick break. Here's some exciting news. The most coveted leadership awards are back. CNBC-TV18 honors the visionaries behind outstanding businesses. Catch the most